After 30 years, we've got a single party gaining majority in the parliament. A leader, Mr. Narendra Modi, has caught the imagination of people, which is unparalleled in recent history. So I say this is a tryst with destiny for our generation in India. In a world which is dealing or is struggling with structural issues, with anemic growth, with lack of leadership, India is likely to emerge as an oasis of hope. This is a vote for growth and governance. I believe that a country with vast natural and human resources, starting with such low base, can correct the self-inflicted pain of low growth and high inflation with the right policy mix and better governance. As Mr. Modi keeps saying that there are very few countries like India which have got democracy, demography and demand. What we don't have is direction, is dedication, is devotion and determination. So what would be the main agenda of the new government? I think it would be to get higher economic growth with focus on job creation and containing inflation. Over the last couple of years, having witnessed the dark side of external vulnerability, policies will gear towards boosting export revenues or import substitution. And for these critical goals to be achieved, better governance, fiscal discipline and execution ability would be the key. Building physical and social infrastructure is essential for increasing productivity of the economy, which will go a long way in job creation, in containing inflation and making India globally competitive. While the legislative reforms may take time, the new government will focus on clearing the execution logjam and creating a feel-good environment which can revive the investment cycle. And there are several low-hanging fruits like dealing with the coal and the iron ore mining issues which can have positive consequences. The next PM has a strong belief in the federal structure and can push through the growth agenda to a different scale by working cordially with the state governments. People have clearly rejected the dole-out policies of the earlier regime. So fiscal consolidation will be one of the prime agenda, and that has to be achieved with larger focus on cutting the wasteful expenditure, particularly subsidies, broad basing the tax revenues net and moving from a mindset of what I say outlays to outcome. We need to have a mindset of outcome and not of outlays. And both fiscal and monetary policy should be in sync to ensure that inflationary expectations are well anchored while investment climate is supported at the same time. And both these goals to my mind are intertwined and not mutually exclusive as the debate goes. The global investors have maintained their faith in the India story with allocations of over $95 billion into equities over the past 5 years or so. In a world awash with liquidity and so short of investment avenues, India would continue to attract large flows given the relative opportunity and the valuations. Now look at Spain and Italy, where till 2 years back or so people were questioning the solvency, and their 10-year bonds are trading at even less than 3% today. However, domestic investors have remained skeptics while Sensex is touching a new high. Having missed the rally so far, the question in everybody's mind is, one, whether India can return to high growth path very soon, and is all the good news already in the price. We believe that macro fundamentals have already started bottoming out. Of course, there are near-term challenges. There is a possibility of an El Nino which can result in impacting the growth and inflation outlook. Fiscal maneuverability is very limited. There is stress in the bank's balance sheet. There are issues with land acquisition. Having said that, a new government has the opportunity to unleash the growth potential by leveraging the structural strengths, notwithstanding these near-term challenges. If we look at the corporate profits, the growth in corporate profits in absolute percentage terms and relative to nominal GDP growth, it has been below the long-term trend for last 5-6 years. And within that, bulk of the profit growth has actually come from select sectors like consumers, IT and pharma. The latter have benefited more from a weaker currency also. But sectors dependent on domestic economy have clearly lagged. This can change with recovery in domestic economy, mainly driven by revival in the investment cycle and a supportive environment. With relatively weaker rupee and restructuring done during this whole downturn, manufacturing sector is regaining competitiveness and can benefit from a sizable opportunity in exports. If we look at BJP's manifesto and Mr. Modi's track record, India can actually be expected to leapfrog in building physical and social infrastructure using innovative technology. In the manufacturing and infrastructure, they have talked about things like a new national gas grid, they have talked about a new fiber cable network, 100 new cities, a freight corridor, industrial corridors, a river linking project which can actually take care of the water shortages. And as a part of our new strategic relationship with Japan, Japan can actually be a partner both in the financial as well as the in terms of the technological partnership that one can expect from the Japan. He has also mentioned that agriculture, manufacturing and services all are likely to get equal attention, and we have huge opportunities in all these sectors. For example, tourism can be a very big sector for job creation as well as for the economic growth. And all these will create opportunities for a variety of businesses across sectors. We also believe that a gradual increase in domestic savings will be there from here on. So, in last couple of years we have seen a decline in savings rate and also within that a large part has actually gone into physical savings. We can expect a higher portion of the domestic savings getting channelized into the financial assets, and then the current rally has a potential to gain sustained momentum as the domestic investors start increasing equity allocations. Valuations are reasonable as a large section of the market is still using a rear view mirror rather than looking forward to the possibilities. What are we doing? Renewed focus on bottom up stock picking. We're increasing the breadth of our investable universe to take advantage of the gap that exists by going down the market cap curve, increasing the weight of cyclicals in the portfolios, also increasing the intensity of engagement in sectors and stocks that are likely to benefit from the opportunities that I talked about. So, my message to investors is we expect tremendous opportunities in stock picking with a long horizon as India is finally embarking on its tryst with destiny. To borrow the line from the election campaign, "Achhe din aane wale hain, good days are here again." That is the message that I want to leave you with. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.